Good morning, everyone. I trust we're all doing okay. My name is Toluwashi Adeshino. Thank you so much for joining today's webinar. I'm honored to be your host for today. I'm joining the session from Lagos. The weather is chilled. It rained last night. It's a bit sunny, but to a very large extent, the weather is looking great. So please drop in the chat. Let's know where you're joining from before we get into today's conversation. Let's get to know each other. Let's get to meet each other virtually and know what's going on up country, where you're joining from, what's the weather looking like. Are you excited to be a part of this webinar? It's one of the many series that Stanbic IBTC has put together to bring to your doorsteps the different solutions we have to make your lives softer. And we're going to be discussing things around wealth preservation and wealth protection today. Oh, Sheyi Egbari is joining from Lagos. Thank you so much, Sheyi. So good to have you here. Idowu Ojo is joining from Maryland, USA. Thank you so much. We've gone global. Let's know what the weather is looking like. And I mean, a lot is going on right now across the world. Missiles all over the place. What's it looking like? How is it impacting you? Here in Lagos, we've seen the cost of fuel go up and then come down. We don't know what's going to happen today. So let's know what are the things that are happening in your environment that is making you giddy, making you happy, or making you want to maybe panic a bit. Let's just, get to know what's going on around us. It always says it's spring, it's cold at night and warm in the afternoon. Very interesting weather. I mean, apart from the rain, it's really hot here in Lagos. For the past couple of days, it's been really hot, but we're grateful it rained yesterday and the weather is looking much better today. Thank you so much for joining us today and for bringing us up to speed with what is happening in your different areas. Oh, someone is joining from Cambridge, UK. It's nice and sunny. Wow, I envy you. That's so cool. It is so hot in Lagos. What part of Lagos is that? Okay, nice, nice. David is also joining from Lagos. Thank you so much. Thank you so much for joining us today. So we'll be discussing something very important. Thank you so much, Emmanuel from Colorado, USA. It's so good to have you on here. Today we'll be discussing something very important to the lives of every single person, both as an individual and as a business owner. I'm sure that when we wake up in the morning, people are trying to get dressed up for work, either as an employee or an employer or a business owner. You're trying to build wealth, you're trying to create wealth, you are trying to, just do different things all over the place. And the purpose for which you're doing it is to create wealth. And we know that creating wealth is important, but protecting that wealth and preserving it is even more important. So we'll be discussing everything around wealth protection and wealth preservation on today's webinar, and why insurance and trust should be on your to-do list for the year 2026. The year is still new. I mean, it's March. Q1 is almost done. So what's better time to have this conversation than now? I am not an expert in this field, but I do have my colleagues who are experts in the trust and insurance brokerage businesses. And they're going to be joining me on today's session to discuss everything we need to know about trust and insurance and why it is very important for us to have them on lockdown in the year 2026. So, 4 young men who are experts in the trust and insurance brokerage businesses will be joining me this morning. And in no particular order, I'd like to introduce first to you Babatunde Adewale. Adewale is an underwriting officer with Stanbic IBTC Insurance Brokers and will be telling us everything we need to know about insurance brokerage this morning. Hi, Adewale. Good morning.
Hi, Solu. Good morning, and thank you for having me on this call this morning.
Thank you for joining us, Adewale. We are happy to have you and we look forward to learning so much from you on today's call. Up next, I'll be inviting Afolabi Badejo. Afolabi works as an officer, loans agency, and institutional trust with Stanbic IBTC trustees, and will be telling us everything we need to know about trust, wealth protection, and wealth preservation this morning. Good morning, Afolabi.
Hi, Solu. Good morning. Good morning, everybody. So nice to be here. Thank you for having me.
Thank you for joining us. We are happy to have you. Up next, I would like to invite George Eto Akpan, Estate Planning Officer with Stanbic IBTC Trustees. Hi, George. Good morning.
Good morning, Tolu. Thank you for having me today. You got my name this time.
Awesome. That shows I'm learning. And thank you so much for joining us today. We look forward to learning everything we need to know about trusts and having a proper trust policy in place to protect us as individuals and as businesses. Thank you. Last but not the least, I would like to invite Spencer Salio. Spencer is a business development officer with Stanbic IBTC Insurance Brokers. Hi, Spencer. Good morning.
Hi, Tolu. Good morning. It's a pleasure to be here.
Awesome. Thank you so much, gentlemen, for joining us. We are happy to be here and we are glad to have you. So I'm not putting you on the hot spot. I just want you to give us all the information we need about having a trust policy in place and having the right insurance cover, leveraging the services of expert insurance brokerage companies. So I'll go straight into my questions. And my first question will be directed to Spencer. A lot of people are familiar with the term insurance and insurance brokerage, and they are wondering how did they get started on this journey? What is the difference between insurance and insurance brokerage? And why is it important to partner with a broker? Again, because it definitely provides more value to go through a broker, but some people will argue otherwise, right? So can you enlighten us a bit more based on your expertise, the differences between insurance and insurance brokers and why it is important to leverage the services of an insurance broker when taking an insurance policy?
Oh, thank you very much, Tolu, for that wonderful question. First, I would just like to give a brief of what insurance is. Insurance is just basically a contract between two parties, which are the insurance company and the insured. The insured is the client, whereby the insurance company promises to compensate the insured, which is the client, in the event of any unforeseen circumstance or occurrence. In the insurance industry, there are many players. And like you said, we're just going to be focusing on insurance companies and insurance brokers. So, insurance companies are players in the industry that are posed with the responsibility of compensating individuals or clients where when there's been maybe an unfortunate occurrence or where there's been an incident. For insurance brokers, we are licensed intermediaries between the insurance companies and the clients. So what we do is we analyze risk of these clients. From this analysis, we prefer the best or the most appropriate insurance products or insurance solutions to these clients and help these clients with engagements with insurance companies. So looking at with respect to this engagement, when some cases when clients want to take up insurance policies directly, they have to go to maybe company A, go to company B, start comparing prices, comparing terms and conditions. So we just take up the hassle of having to do those engagements from the client, help the clients have these engagements with the insurance company and ensure that we are getting these things at the best price and and giving them maximum benefits for all these types of insurance. Thank you very much.
All right, thank you so much, Spencer. So the summary is the insurance company is the company that says we can insure you against certain incidents happening, while the brokerage company is the company that can get me the best rate and the best offer. So company A is offering me this, company B is offering me this. I'm not an expert in that industry, and I can leverage the services of the brokerage company to get the very best deals. Awesome. That is so insightful. And I hope that for those of us on the call today, individuals and business owners, we are already seeing the light as to why, when taking up an insurance policy, we need to go through an insurance brokerage company. Thank you very much, Spencer. I would like to direct my next question to George. At what point should a business owner start thinking about trust? So is it at the point where you're starting the business, or is it at the point where the business is growing, or when the business has grown so much, it is now listed on the NGX and you're trading your shares already? At what point does it become very important for business owners to start thinking about trust?
Okay, fantastic question. So, before I begin, I would also like to explain what a trust is. So, a trust is essentially a structure whereby you transfer the legal ownership of your assets into a trust, wherein you become the beneficial owner. All right. So it distincts the personal ability of the owner of the asset in question from the distinct nature of the trust itself. So I would highlight more as I go on. All right. So to speak specifically to your question, I would begin by saying many successful businesses collapse not because they were unprofitable, but because the founder failed to plan for succession. All right. The bridge failed to plan for succession, asset protection, and ownership transition. Now, there's this fantastic statistic I saw recently where it was stated that globally, less than 30% of family businesses survive to the second generation, and less than 12% reach the third generation. So, it is tried to say that trusts are a continuity tool, not just a legal structure. Now you say, how? What are the ways I can help my business, or as a business owner, how can I help my business? I've highlighted it into three phases, which would include succession planning, whereby the trust would allow the founder to transfer ownership without losing control of his business immediately. Now, this would help you avoid disputes, especially when you have family dynamics that you have a large family. It would ensure business continuity, and it would set out clear succession rules for your family in terms of who manages the business, who runs the operations, and the likes. Now, another way trust can help business owners is asset protection, from where they face risks like lawsuits, creditors, divorce, business liabilities. So a trust can ring fence your assets. Now, so to juxtapose this, business shares held by trust cannot be joined to personal liabilities of the business owner. So this is a very adequate way of separating the risk of the owner's personal liabilities from the business itself. Also, we speak to business continuity. When a founder dies suddenly, the bank accounts will be frozen because his estate will have to go through probate. There'll be probate delays, and if you have a situation where the trust already owns those shares, the shares are not going through probate, meaning your business can run even if sudden emergencies happen. Now, a founder can also have control without direct ownership with a trust structure, because the business owner runs the operations of the business while the shares are held with a trust. So there's that separation in terms of ownership and control. All right. So another thing will be tax efficiency. Now, looking at the Nigerian tax laws that have been enacted, trust are another adequate way in terms of planning your personal income tax and your company income tax. All right. So I would now also go and speak to the three stages of setting up a business. So in terms of juxtaposing it with the trust structure. Now, for the startup stage, this is the stage whereby the founder is basically building the identity and the intellectual property of the business. A trust will be useful here where if the founder already has he has valuable intellectual property, he already has investments, or he wants early stage asset segregation, a trust will be very essential in terms of the business continuity in the event of death or incapacity, as to who gets what and how the trustees can keep managing the business or transfer the ownership of those asset classes to the right persons that would enable the business to keep running. Now, I'll speak to the growth stage, which personally I think is the most ideal point. So this is where a trust will become strategically powerful for your business, being that this is the stage where you're already expanding, you're hiring people, you're generating profits, you have established assets around your business. So a trust will offer you asset consolidation, creditor protection, smooth succession planning, and continuity, even if something happens to the founder or the business owner. And it is very well known that this is where a lot of family disputes and disruptions happen, usually around this stage, and a trust helps to prevent that. And lastly, will be the maturity stage. Now, in this stage, the trust would help safeguard the long term intergenerational value of the business. It will help prevent fragmentation of shares or loss of control when there are multiple beneficiaries. And you have family dynamics where you have a lot of children competing for control of your company. So it would enable the founder to set rules for governance, voting, dividends, and long-term leadership, which is very essential to the survival of any business. Thank you.
All right, thank you so much, George, for that detailed schooling, I would say. So, for business owners on the call, if you're just starting your business, you just got it registered, operation just commenced, this is the point where you need to speak to a trust expert to help you structure your assets, both personally owned and the ones that belong to the business, to put in a structured format. And if you are already running your business, regardless of the growth stage, you can also sign up and get a trust company to access your assets and come up with a policy that works for you. I'm sure that a lot of us are familiar with this situation. It might not have happened to you personally, but I'm sure we've seen it in movies, or we've heard about families where, the breadwinner was doing so well, the companies were doing so good, and then something happens out of the blues, and then the family breaks apart because there's no trust in place, there's no will in place. Everybody's fighting for their own bit of the assets, nobody's thinking about the children, everybody's just fighting for what they can get. One proactive way to solve for this kind of situation is to be is to put a structure in place, to get a trust policy in place, to get a will in place, to make sure that whether you are here or not, your loved ones are taken care of and your businesses are protected. And like you said, we all got the update on the changes that have been made to the tax policies at the beginning of this year, and people are running all over the place. How is it going to impact my salary? How is it going to impact my business? One of the ways you can protect your business is to take up a trust policy and see how that can be factored into your financial preservation and protection journey. Thank you so much, George. That was very in depth and detailed. My next question will be to Babatunde. So, sometime last year, Nigerian Insurance Industry Reform Act was modified. A lot of changes were made to the policies, and some of those policies are now compulsory. They've been woven into our day-to-day activities. Can you highlight some of those mandatory aspects of the policy, and how do those policies contribute to strengthening Nigeria's economic and social landscape?
Yeah, thank you, Tolu. Thanks for that question. So for Nigeria Insurance Industry Reform Act, NIRA 2025, is actually a landmark reform designed to modernize the insurance sector. So some of its major aim is to improve and strengthen consumer protection, improve capital adequacy, and also contribute positively to Nigerian economy. And some of the ways to contribute to Nigerian economy is one of its features, which is the in for reinforcing of the compulsory insurance, we have about 11 policies that fall under this bucket. We have the group life insurance policy that actually help to protect the family members. Okay, yeah, thank you. So the group life insurance policy designed to actually assist to protect the family member from financial hardship when the breadwinner dies. It also assists the employer to reduce their liability in the event of death of his employee. So because if you don't have this policy in place, obviously you have to pay the death benefits. And we have the credit life insurance. Credit life insurance is actually a policy designed that when you are granting a credit facility or you are granting a loan, you must maintain a credit life insurance.
All right, thank you so much, Babatunde. I think we're having a bit of network issues. While we get that sorted, I'd like to move on to Afolabi. So, speaking on the subject of trust, I'm sure there are people on the call wondering what is trust. Does it mean to trust Stanbic IBTC? Does it mean to trust myself or my family members?
Okay, we're so sorry about that. Sorry about we had network glitches. Tolu, thank you for the question. The question was, how do trust help protect businesses from dispute, especially in family businesses? So I would say disputes are inevitable in family-owned businesses, mainly because of one thing: familiarity. I know you so well. So who are you to say this? Who are you to say that? So most family-owned businesses often struggle not because of their poor performance, but because of poor planning. So that's why the popular say, which is, if you fail to plan, you are planning to fail. But with trust in the picture, it helps you to do quite a number of things, which I would be saying or speaking to. So with trust in place, you are able to create clear rules for governance. That's the trust deed. Okay. So as I was saying, the trust helps to set up or create clear rules for governance. So the trust deed, what's a trust deed? Is the formal agreement in which the trustor or the settlor, that's the owner of the asset, transfers the property to the trustee, who owns and manages this assets for the benefit of the beneficiary. So the trustee defines who votes, who get dividends, who runs the business, what happens if someone chooses to misbehave. So the other thing the trust helps to do, or it ensures, is neutrality. A corporate trustee is not emotional. There are no sentiments here. All we do is we follow the trust deed and not family politics. Other thing is the trust helps to protect assets, the assets from internal and external threats. So trust assets cannot be easily frozen, manipulated, or fought over. My colleague spoke about that earlier. So let me give a life case scenario to address this. A family owned bakery somewhere in Abuja nearly collapsed. Why? Because the founder passed suddenly. So the eldest son took over the ovens, the daughter took over the finance, and the younger ones were left without nothing. So within months, quarrels started, aging withdrawals, arguments over salaries here and there, and the business was about to shut down. But the family had to come together and say, we know what, we need to put a trust in place, and they engage the trustee. So when they eventually set up a trust, what did the trustee do? The trustee implemented governance structure. Profits were allocated according to a formula. A general manager was appointed, and dividend entitlements were clearly mapped out. So 2 years later, the bakery became more profitable than it was before the founder passed. So imagine when the founder was alive, he had set up a trust, it would have been profitable, more profitable before he passed. So setting up a trust helps to take away sentiment and put in structure. So when a trust is in place, assumptions are replaced with structure, emotions are replaced with governance, and potential conflicts with continuity. So what I can boldly say now is the only vehicle you can trust is a trust. Thank you.
Thank you. So in summary, we can trust a trust when it comes to allocating assets that have been accrued by an individual or a business owner. Thank you so much. That is quite detailed, and like we say, um, it is good that we are amassing all these wealth. We're doing all the hard work, and we are trying to put our monies in the banks, in the investments, and getting all of that done. But we also need a better covering to make sure that our beneficiaries, our businesses, the people for whom we're doing all of this hard work are duly covered even while we're no longer here or while we are no longer actively participating in the businesses. Thank you so much, Afolabi. That was quite detailed. So I would like Babatunde to give us a bit of insight into brokerage advocacy during claim settlements. So let's take it as a business owner took an insurance cover against perhaps fire event, and unfortunately there's an outbreak, and now they need their insurance company to come through and settle and save the day. Brokerage advocacy during claim settlement often overlooked, because what the average person would do is, I took up a policy from this insurance company, and then they'll go straight and direct to the insurance company to say what I took an insurance against has finally happened, and then they eat all of that roadblock, bring this, bring that. How does insurance brokerage help to buffer this situation? How does this advocacy enhance wealth preservation for clients?
Okay, thank you very much, Tolu, for that question. And sorry about the network disruption earlier. So, in insurance, trust is everything. People buy insurance believing that their their claims or benefits will be paid when it matters. Without this confidence, the sustainability of insurance is threatened. And there's one thing I usually say, that the best marketing strategy in insurance is prompt claim settlement. You see, what you sold at the beginning of that contract is a promise that would compensate you when a loss occurred. And at that period, when the loss occurred, the insured is currently at a vulnerable moment. He needs every possible assistance to actually get back on his feet. And now, this brings me back to insurance brokers claims advocacy. How do we help this customer at this period to actually preserve his wealth, to protect his wealth, and to maintain that hard-earned money he has gathered over the years because of the loss that occurred? Now, the first thing is the prompt claim settlement that I mentioned earlier. You would agree with me that delay in claim settlement will actually hinder or disrupt a business. So if that claim should actually linger for too long, it will actually make the insured to actually still dip his hand into his personal finances to actually get back on his feet. Like, for example, somebody who has a truck that deliver goods to Ibadan from Lagos on daily basis, who had an accident and needed um, his claim to be paid, and this claim got delayed, obviously the insured would actually get agitated, because every day counts for a business owner. Every day counts for him because he is not making money and he needed support. So, as a broker in insurance, we would assist you to facilitate and fast track your claim. And we can also use our expertise to actually use our escalation channels to get this claim paid on time. The second point is the second point here is the the second point here is the interpretation of policy documents. You see, some insurer actually try to, because of they want to reduce liability, they will try to misinterpret or quote the insurance policy document wrongly. And as a broker, as an expert in this claim, we will try to ensure that we help you and assist you to get your claim out from the insurer. Another point is the documentation part. You see, some claims failed not because of the event insured against is not covered, but because of weak documentation. Some insured did not know what to submit, when to submit, and how to submit them. So, as an expert in this field, we would guide you on what to submit, how to submit, and when to submit it. So, if you look at all these points, you will realize that as a broker, our advocate for claim would help you to actually protect your wealth, maintain your wealth, and preserve your wealth. I will leave you with this note. The important moment in insurance is not when you buy the policy. The important moment in insurance is when a loss occurred and your broker fights for you. Thank you.
Wow. Thank you so much for that explanation, Babatunde. That was very insightful, and I can see in the comments already great insights, very instructive, good guide. And like you mentioned, the most important moment in your insurance journey is not when you are signing the documents, it's not when you are taking up the policy. It is when it is time for your insurance company to come through and actually pay you. That is when you would see the importance of the policy you've taken off. And like you rightly mentioned, there are some things that are beyond our own day to day engagements. We have experts in the house that can help with the interpretation of documents to make sure that your insurance company is not trying to outsmart you, to make sure that you're getting the best deals, to make sure that all the clauses in the documents are protecting you as much as they should, and to make sure that you are covered. And when there's time for claims, you're not the one doing all the legwork and doing all the running around. All you need to do is call your insurance brokerage company to say, the policy you took for me the other day for this particular loss, the loss has now materialized, and I need you to step in to mediate and make sure that settlement is done and claims is paid. And that is what your insurance brokerage company is going to do to make sure that you are at home, your normal lifestyle is not disrupted. They will do all the running up and down and make sure that when you expect that alert for claims to drop in your account, it drops just right on time. Thank you so much, Babatunde. That is quite detailed. My next question will be to you as well, and is with regards to Nigeria Insurance Industry Reform Act that was updated last year, and some policies were made compulsory. Can you do a quick recap of some of those policies that have now been made compulsory and how they contribute to Nigeria's current economic and social landscape?
Okay, thank you, Tolu. So, the NERA 2025 actually tried to reinforce some of our policies in place. We have about 11 policies that fall under this category. Like I was mentioning earlier, we have the group life insurance policy, we have the credit life insurance, we have the motor third party liability policy, which means that you must have a motor insurance policy in place while driving on Nigerian road. We also have the petroleum and gas station policy. So for every petrol station and gas station, you must have a policy in place against third parties. And also we have the marine insurance for importation, we have the aviation liability insurance, we have the um, employers liability insurance, we have healthcare professional indemnity insurance. All these policies, what they are trying to achieve is to actually contribute positively to Nigerian economy and social landscape. And how do they do this? First is it will help us to improve our financial stability in the markets as an industry. It will also help to strengthen the social safety net. Policies such as group life insurance, credit life insurance, and health insurance, employers liability, and it will also help to boost investors' confidence. So somebody who wants to actually invest in Nigerian economy would actually be confident enough and have the comfort that there's a policy in place, there's a well-regulated insurance industry in Nigeria that can actually give me the comfort of venturing into this risk in Nigerian economy. And we also have the protection of infrastructure, public infrastructure. So like the public liability policies, the insurance for public building and builders liability, it will protect public offices, it will protect public buildings. And lastly is the penetration of insurance in the Nigerian economy. Currently, it will help us to increase our penetration of insurance in the Nigerian economy because we currently sit at below 1%, which means we hover around 0.4 to 0.6% currently. And with this reintroduction of all these compulsory insurance, it will contribute positively to Nigerian economy because the bedrock of every viral economy is insurance. Thank you very much, Tolu.
Thank you so much, Babatunde. That was very detailed. And for those of us who might be wondering, how does this affect me? How does this affect my business? And in recent time, especially during the festivities, I remember there were a lot of incidences around fire outbreak, and people were recording lots and lots of losses. They are having to pay back loans from their pocket, from their savings. You can imagine how many of those situations would have been buffered and not been as severe if an appropriate insurance cover was in place. And while Babatunde was speaking, he did mention something about marine insurance. I'm sure there are people on the call who do shipping of goods from China. You're buying things from Temu, they're delivering to your doorstep. You are doing all of those interesting things. There's marine insurance, and I'd like Spencer to speak to that. What implication does this Nigeria Insurance Industry Reform Act, what implication does it hold for Nigerians engaging in importation? And how can Stanbic IBT insurance brokers assist them in securing competitive and reliable coverage?
Thank you very much, Tolu, for that question. I would say the importance of marine insurance cannot be overemphasized, especially for clients that are into importation. You see, the effect of this is core protection for everyone that has to go into importation. So where there are cases of partial or total loss of these goods, the marine insurance will step in to compensate or put you back to the position where you were before the loss. Marine insurance basically is categorized into two broad categories, which are Marine Clause A and Marine Clause C. For the Clause C, the kind of compensation attached or associated with the Clause C is when it's as such when there are losses that are total in nature. I'll give an instance. Maybe somebody is importing trucks, for example. They're importing 10 trucks into the country, and something happens in the sea, and maybe 3 trucks were damaged in the process, and you have a marine insurance clause C, you will not be entitled to any form of compensation. But in the event where you are bringing the 10 trucks and everything got missing, maybe due to heavy storm and the likes, you'll be compensated for clause C, under clause C marine insurance. But what we usually advise when clients want to take up marine insurance is marine insurance clause A. So for clause A, whether the loss or damage is partial or total, you will still be adequately compensated. We recently had a client that wanted to import some things into the country. She stays in Ogun State and she wanted to import from China. So her ask was she wanted marine insurance and she also wanted an insurance that will cover the goods from the port up to her destination, which is the goods in transit. The question was, or the questions were one, okay, are these the same goods? She said yes. So the same goods that those come from China will go to Ogun State. She said yes. Then we advised, really, there's no need to get another insurance, which is goods in transit insurance, because marine insurance clause A on its own has an extended cover to help with an insurance coverage for the goods that will be moving from the port up to the client's warehouse or the client's location. So instead of having two insurance covers, having a marine insurance and also going for a GIT insurance, really, we just had to advise her to eradicate that GIT insurance part. That gave her a lot of cost savings because it was cheaper for her and she got adequate protection from China up to her location, which is her warehouse. Thank you very much.
Thank you so much, Spencer, for that detailed explanation. And like I mentioned earlier, there are things that the average day-to-day human does not know that we need to leave to the experts. So you can imagine if she had to pay for two different insurance covers, she'll be wasting money knowing fully well that there's a different cover that could have given her all of that. And she's a business owner. She could have put that money into increasing the quantity of things she wants to import. She could put that money into other aspects of her business. So, again, sometimes and most times, it is more advisable to go through the professionals to get the right counsel and advocacy on the different things we're trying to do as it pertains to the subject of insurance. Thank you so much, Spencer, for that detailed explanation. It was really insightful, and I like that we use situations that we are all familiar with to bring this home. So, George, I know that a lot of people don't like to hear the subject of insurance because they've been beaten in the past. Oh, I took up an insurance policy, an insurance company did not come through for me at the point of settlement. What some of the most common mistakes people make when neglecting insurance or trust in their wealth management strategies, maybe due to past expenses, right? And how can this be avoided?
Okay. Yes. So I would to speak to the question. I would want us to first confront the hard truth. Most people do not fail because they didn't work hard. They fail because they didn't plan. One of the biggest financial disasters I see in families is caused by businesses. It's not caused by lack of money, but by lack of structure. Now, the painful part of this is these disasters are completely avoidable. Now, I would highlight these mistakes moving forward now. So, one thing I've noticed is a lot of people rely solely on wills without first analyzing the estate planning option they have chosen. Now, when you have the word will or when you choose a will, what you are doing is it is not a protection document, it is a distribution document. What a will does for you is it distributes your assets to your beneficiaries. But when you speak to a trust, trust is structuring your wealth for the benefit of your beneficiaries and above, meaning it can go into other generations. Now, you must first consider that when you have a will in place, your will go through probate. And during that period when it goes through probate, it's everything is on hold. Nobody can access your bank accounts. Nobody can access your investments. So it takes a bit of time for your executors of your estate to apply and get that grant of probate to have access to all your assets in your estate. It's your bank accounts, your mutual funds, your stocks, all those institutions that you had investments in. It will take a bit of time. And you have to consider that during this time, your beneficiaries are alive. If you are their core, if they depend on you, what is the plan for them to survive that time period when there is no access? So it's something you have to consider in terms of, oh, my family dynamics. I have a lot of children. I have different mothers. If I am not alive, how would they survive for that time period before they have access to these monies that I've worked all my life for? Now, um, another part another mistake people also make is people also don't plan for incapacity. Now, people mostly plan for death. Okay, I'll just do a will after my demise. My executor applies for probate. But what happens when you are not physically able to sign documents, or you fall sick, or there is something happening with you can't mentally make decisions with regards to your business? How don't the trust and insurance structure can help in those situations, inferring that, let's say for example, you can't physically sign documents or you are incapacitated. A trust or insurance structure can help in terms of getting staff paid in that trying time. It can help in the operations in terms of setting instructions on who would be in charge of assets or in charge of operations when I am incapacitated. So I would say incapacity planning is just as important as planning for your demise. All right. So another mistake I see is people usually delay in making these decisions to either take up a trust or take up an insurance. People usually wait until there's a crisis after illness or after business growth or after family conflicts, then they begin to plan. And more times than not, you see that it becomes more expensive, it becomes more complicated, and becomes less effective. So I would say early planning is cheaper, cleaner, and legally more powerful. And also, another mistake I can highlight is a lot of business owners, they ignore business continuity, especially mostly among African businesses, because you would notice that a lot of African businesses collapse when the founder dies, he gets sick, he relocates, or he becomes incapacitated. So without a trust or insurance structure, your contracts can stall, your bank account can be frozen. As let's say you have a company and the mandate in your for your bank account is only you can sign. So how are the employees supposed to function? How is the operations of the company supposed to function? Then panic with the employees sets in, suppliers pull out, your customers lose confidence, and your competitors remove in. So you can key it to the fact that the founder now becomes a single point of failure, which is a very dangerous place for any business. Now you would ask how to avoid these mistakes. I would say you start early. You don't wait until your assets grow or challenges begin. Trust and insurance actually work best before the problem arises. Second one is you can combine both trust and insurance, because insurance creates liquidity, trust creates structure. And together they can create continuity, protection, and certainty. Another point I can highlight will be to use professional trustees, not relatives. I've seen a lot of situations where, oh no, my distant cousin in Abak will be able to handle this. So you have to also consider there's the personal vices of man, and you can subject your business to those personal vices if you allow not independent parties manage your businesses. So professional trustees would always follow instructions strictly and will be regulated and always to remain neutral and would not be able to be influenced by family politics. Now, it also trust structures, insurance structures would also give proper documentation, as there'll be written guidance that will prevent family business disruptions, wrong interpretations, and it becomes like an instruction manual for how your business and your assets would be or must be handled. All right. And lastly, I would say communicate with your beneficiaries, because I think silence breeds suspicion. Even though you don't reveal the amounts to your beneficiaries, at least explain your logic in terms of how assets will be managed, so it leaves no one or it doesn't feel like they are blindsided. So thank you. That's
All right, thank you so much, George, for highlighting some of the very important mistakes that people make while planning their wealth management strategies and um, knowingly or unknowingly leaving out the part of insurance, trust, and wills in all of that process. So the best time to start is not for all of us on the call. Oh, I'm not earning so much. I'm not yet very rich. I'm not unbelievably liquid. It's fine. Just start where you are and make sure that the people that you are currently taking care of will be taken care of if anything happens to you or your business. Thank you so much. Afolabi, I'd like you to do a quick wrap on what is the major difference between trust and wills, and how does Stanbic IBTC trustees support businesses and individuals to ensure continuity and preservation of their assets in 2 minutes?
Okay, thank you very much for that question. Okay, to start with, Stanbic IBC Trustees, what we do is we provide specialized professional services that strengthens business sustainability. We help to reduce risk and protect the assets across the generations. So we are looking at continuity, so it has to be passed from one generation to the other. So this support which we provide, they are comprehensive, but I'll try to itemize a bit, a few, so that we can be well informed. So with the likes of a living trust, if you set up a living trust, what the living trust does is it helps to put business structures, shares, the properties of the company, and the cash flows. They are all placed under a professional care with the trustee. So it means that the company's assets are well protected from disputes and probably probate delays. Another thing we do is, or which the trust helps to do, is to um, provide a clear succession planning and governance, which means that we would help identify future leaders that would set rules for management and would help to reduce leadership vacuum risk. So, meaning that if there are no leaders in the place, definitely people would do things not in the right way. Another thing is investment policy statements. What this vehicle does is to ensure that the assets, that's the cash, the equities, and the properties of the company, are properly invested according to the owner's risk profile. Everybody has a risk profile, for that will be followed through. And so also professional unbiased administration, meaning there will be transparent, reporting assets consolidation, which means that there will be protection from mismanagement whatsoever. So let me give a life case scenario, and I would round up with that. So let me say a logistic company owner that was about to retire, he had his fears that his children were not ready to run the company. So what he did was he reached out to the trustee, and he said he placed his business shares into a trust and instructed the trustee to do a few things. One, he instructed the trustee to appoint a professional manager. He also said, okay, pay my children allowance until they are done with their business school. He also instructed that, okay, keep 40% of the profits invested annually. That's 40% of the profits of the company should be invested annually. Then also gave a mandate that the sale of his business should not be done until at least 15 years. So prevent the sale of the business for at least 15 years. So when all of this happened, unfortunately, the business owner fell ill. But guess what? His business did not slow down because of what? He had already set up a trust that ensured continuity, transparency, and also professional oversight. So today, if you look up in the real sense of things, his children are now serving as board members in the company. They are not operators, but just what? Board members. And the reason why they are board members is until they gain enough experience so that they can do what? They can now take over, and they can now take over the leadership of the company. So in short, trust helps to ensure continuity. Like I used to say jokingly, if you are not informed, you'll be deformed, which is info laugh info. If you don't have the right information, you will do what? You'll be deformed. So thank you very much.
All right. Thank you so much for that detailed explanation. The summary of everything is info laugh info. If you don't understand Yoruba, it means you are going to fly depending on the amount of information that you have available to you. So thank you so much for all of that information. So for those of us that are getting started on our wealth creation and wealth accumulation journey, you know that as you are planning, you need to move close to an insurance broker and say, this is where I am on my journey. I need to put structures in place. You need to move closer to a trust expert to say, this is where I am. I need something to be put in place. And if you're looking for where to get started on this journey, Stanbic IBTC Insurance Limited, Stanbic IBTC Insurance Brokers, and Stanbic IBTC Trustees are here to get started with you on that journey. If you'd like to sign up for any insurance solution at all you need to do is send a mail to insurancesolution@stanbicibtc.com. And if you're interested in any trustee solution, please send a mail to sitlagency@stanbicibtc.com. You can look at the bottom of your screen. We've written it there. Just send us a mail. If you don't know where to start, just say, dear Stanbic IBTC, I don't know where to start. Help me. And we'll reach out to you and pick up the conversation from there. Again, like we mentioned, always go to a professional. It's good that you have a cousin that knows one or two things about trust and insurance brokerage. But please, I know you want to support your family and keep the money in the family. But once in a while, please reach out to an expert and get the very best options available to you. Once again, trust will protect you, insurance will protect you in your succession plan, in governance, as a business continuity tool for asset protection, to even manage your credit rating, your credit score. And like we said, for insurance, every day counts. And the day that is most important is the day you need to make a claim. For business owners, every day in your business is important. you want to make sure that you are not tied down because your insurance company is yet to pay your claim. Go through an insurance broker and overcome all the roadblocks and hassles, right? And when it comes to interpretation of documents, there's a reason people hire lawyers to go to court with. There are things that are beyond us that we cannot interpret on our own. Again, just reach out to an expert in the trustees business or reach out to an insurance broker and let them interpret these documents for you so that you can get the best possible cover for protecting and for preserving your wealth. Thank you so much, everyone, for joining us on today's webinar. We hope you found it useful. We hope you've learned so much for yourself and for your businesses. And we'll start receiving all those emails to say, I joined your session today and I'd like to get started on my wealth preservation and wealth protection journey. And thank you so much, panelists, for sharing with us from your wealth of knowledge everything we need to know. Maybe not everything, the most important things we need to know on the subject of insurance brokerage and trustees. Thank you so much, everyone. Thank you so much, clients, colleagues, for joining us today. And we look forward to seeing you on our next webinar. Thank you for sending that email to get started on your insurance journey to insurancesolution@stanbicibtc.com and for sending that email to sitlagency@stanbicibtcbank.com. Thank you so much, everyone, and do have a great rest of the day.